Hello everyone, welcome to another weekly market review. It is the 24th of May 2021 and you're likely here because you saw how we were able to be on the right side of this big move. Congratulations to everyone. Let's have a look at what we can do from here. Right, starting with the total market cap. I'm going to make this review slightly quicker because I've been updating things publicly quite regularly. So you guys will be quite in tune with what I need to do. If you're not, just please look at my Twitter feed. And otherwise, here we are on the weekly time frame. This is a big impulse. If you look at this entire wave down, it's 53% for the entire crypto market cap. It's this is an impulse, guys. Right now, if anybody is thinking otherwise, it would take a lot of effort, to undo this. Let's go to the 3-day for a second, just to look at some important levels right here. It's the 3-day block that has pretty much held up price. You see, we don't have a 3-day close below this. Of course, if we don't close higher within today, then I would say that this 3-day block is also getting negated, which again reflects how weak the market has been. We'll go down to the 12-hour. So this is what I had drawn out. Why I had drawn this out now, you should understand. People always wonder if these scribbles are supposed to be abstract, or there's a lot of analysis that goes on behind this, guys. These are not abstract. As you can see clearly, we got a reaction right from this level, and this had sentiment involved in why this could happen. It was essentially because you see people had been buying the dip all the way since here. Big accounts, very bullish, dip, buying the dip all the way down. But we got this big move up. So this was a 60-70% move. This is a fantastic level on BTC, the yearly open. So we played that, very grateful for that big event, that big move. But what that did is we got a bit of a consolidation up here, for a day and a half. And this is the time when a lot of new entrants, people who watched this entire move, they were not a part of it. This crash happened and they're like, oh, we're gonna get crypto cheap. Look, it's bounced and it's stabilized. And of course the dip buyers continue to add to their positions and whatnot. But just look at this, such a big move. Momentum is completely against everything. There is absolutely no structure and nothing yet. So the probability of just straight away smashing the monthly open after such low momentum and already having so many late entrants into the market, it was significantly lower. There was potential for it if we got up and started to hold this weekly level. We never ended up holding it. Just look at how clean this is. This support resistance flip here, support, this is major support, guys. Went to new highs from here. This was a very big level. 25th April, large caps, they really made a big move. So this was a very big level. Just look at how clean this support resistance flip is. Support, break, resistance, and confirmation. This move is a confirmation of this resistance. Look at the reaction from here. It's a 30% move from this resistance. So what we know now is that this has become a very significant level, 1.75. Just gonna pull out the fib quickly to look at it. Yep, so slightly above the 382. Okay, so this is the impulse we've gotten, guys. And if we have looked at it on a higher time frame, what happens when we have market cycles? Just look at it here on the 3-day. What happens when we have market cycles? We get a big move down. Look at the previous market cycle, 70%. Okay, so this is still much better off. This is straight impulse of 70%. This is a straight impulse of 53%. so it's not too bad. Though what we got is we trapped a bit more people up here. This took about 4 or 5 days, 6 days, and then we made another move down. This took absolutely no time. This move gave people no time to exit. Say you went on a little trek and you came back and you didn't have stops, you're finished. But anyway, so we got that move. And I'm not going to compare and say that what we did last time is what we're going to do, because I will tell you something for sure, that this is not what's going to happen. Okay, and this is the biggest mistake people do. This is the kind of confirmation bias you gain. Just look at what is available to you and start comparing it and be like, oh, it's going to be like this. No, it's not going to be like this, because everybody is looking at this. When you're looking at this chart, this is all you can see. You think that's what the market is going to do? Like, you really have to get smarter if you have to survive in this market. But all big impulses, when the trend is weak, there's something that they do. They make a more shallow correction than most. What correction does this make? A 382. Look at it on the weekly closing. Never got above this. I'll just tell you, this total market cap on TradingView is a bit skewed, so we can't really look at it on a higher time frame to gauge it. But anyway, we got a 382 retrace when the impulse was very strong. So what we have for now is very clean resistance level, okay, and a strong impulse. So what are the scenarios for us? Pretty much mapped it out here, guys. Mapped it out before the move happened. We got this move, complete clean out, complete washout. People very, very afraid here. Got a strong move out of here. We'll go to the lower time frames, but for now, first impulse, complacency shoulder, and second impulse, at the very least, that is what can happen. You want a bullish scenario, you'll be like, oh, okay, what's your point of negation? So this is the high right now that made the low. So I'm just gonna hide these for now. So this is the most ideal scenario. It's happening in much shorter time frames, guys. This is not how long this move up will likely take to here. I don't know about this correction, but as of now, this complacency shoulder also, everything is happening much faster. It's very emotional, very accelerated market at the moment. So what we have is potentially a 382, but again, significant resistance. What do you want to see? Say what is the bull case scenario? The bull case scenario is that we do this, we build a higher high, we make a higher low, likely somewhere here, start to structure and possibly at least reclaim the monthly open. Price starts doing this, you can know that market has gained strength. This is where we ended up finding strength. Where will you get confirmation? Simple market structure, guys. Do not make things complicated when you want to understand whether it's going up or down. It is going to be going up once we break this. Okay, we make a higher high, a higher low. This much is not enough. We could still just come up here and go back down. You want that confirmation, a higher high, a higher low, and then you go up. Until then, this is the first impulse of the end of a market cycle. There is nothing else that can disprove it. There are more things that reflect it. There are signs that show us that things like this, when they happen, this is very low probability that right now it can just fly out from here. It would need some very significant fundamental events, which I do not think right now the market needs. Understand how much resistance is up here. This is March, April, May. 3 months of market participants are stuck up here. And you want to know how many people are still underwater? Just pull out a VWAP for the average price since September. Okay, September is what is supporting. Okay, and let's look at December. That's like a big breakout. So everybody, the average buyer from December, if you are still holding, and this is essentially Bitcoin, guys. Total market cap is 50% Bitcoin. So this is most likely Bitcoin, because if you're holding alts in December, you're probably on the positive. But you're holding Bitcoin since then, and you have been kind of scaling in, buying little, you are underwater. So this is how deep we have come, and this is how many people are offside. So if you think we're gonna come up here, we are gonna meet a lot of sellers up here. Okay, we cannot. There's one big resistance which we've confirmed. We will go higher. Here's another big resistance right here. We go higher. There's another big resistance right here. So this is seller territory now up here. You think we can just like move back up and have no problem and move all the way? That's not going to happen. Not after a 53% impulse. So this is a lower probability scenario. But if someone wants to know what is the bull case, this is the bull case. You need a higher high, a higher low, and then you make another higher high. This is where you're like, okay, it's bullish. You find structure here, find support over the monthly open after this, and you can start, getting aggressive about looking for upside again. But until that happens, this is a low probability scenario, guys. The higher probability one is the red scribbles, but essentially something like that will happen faster. Okay, so we can come up here, the 382, all the way up to the monthly open, the 0.5, and start to meet sellers. We go on a lower time frame. Let's go to the 4 hour. Okay, so on the 4 hour, just look at this. This is where a lot of people got trapped. Okay, so we made this move up. People are like, oh wow, crypto dropped a lot, let's buy a lot. So what I would say is, here is where we're going to meet these sellers. A lot of people who want to get out. And also what I can tell you is, you will not be alone now in understanding that this might have been the end of the cycle. There is a lot of capital that knows that and understands it. So it's not going to be so simple that price goes all the way up and a lot of people get to exit. Rather than, unless you panic sold yesterday at 52%, could have an opportunity of selling at, even say you bought right up here, still about 20-25% down. And honestly, I would tell you, the retail is still going to get bullish, and I will tell you, people are still only just dying to buy the dip. This is going to be a great shorting opportunity, like a great risk adjusted short. This is going to be a great place to exit things, the coins that you are trapped in. And why is it a great place? It's not because we have some kind of a bias and it's the end of the world, because it's a risk adjusted exit. Just how you have risk adjusted entries, this is a risk adjusted exit. Why is it a risk adjusted exit? Because if we do this and we come back here, you can get back in, and you'd be getting back in pretty close to where you were exiting. If you're exiting here, you're getting back in somewhere here, above the monthly. Like, just you're paying a small 5-10% premium for something that may start trending again. That's not so bad, because what is the other thing that can happen? It can go to zero. It's true. You're holding rubbish, and if you're holding rubbish, you're holding that trash. It can lose its value by 90%, 95%, because that happens in market cycles. This is unconfirmed that it's a complete market cycle, but it can happen in a market cycle. So you're leaving yourself the possibility of losing 50, 60, 70% of the value of whatever you're holding. And this is the only risk you're having to take. You're just having to let your bias be, get rid of what you're holding, and be willing to buy it slightly higher when there is confirmation. It doesn't get simpler than that, you know. So for total market cap, currently that is the plan. We look like we have flushed out the first wave, the fear. We can move about a bit over here. Ideally should be at least coming down, you know, to these levels once more, you know, one more little wave down of fear. Golden pocket, decent place to be risk adjusted for counter wave longs. 0.5 as well. These are two good levels that I would be watching for potential to get this move up. How high the move goes, we cannot say, guys. You know, there is no guarantee it can come all the way up here as well. Maybe we are just supposed to take these highs, you know, and that is enough. And the market has that narrative and is too weak to even go beyond that, because when the market is too weak, you know, even a 25-30% retrace, it is standard. It doesn't need to go all the way to the 38%, 40%, 50%. It doesn't need to go all the way there, because if they are sellers waiting up here, it can also just take the liquidity up here, start to show weakness, you know, build some kind of structure, and then just move down, you know. Because for the higher time frame, then, so we've looked at what the potential upside is, you know, what the potential scenarios are, what your bullish case is, okay, what your most probabilistic scenario for now is. And we can just look at, if you want to know what I could see possibly potentially for high time frame downside, if this is what it is, if this is the first impulse of the end of a market cycle, I mean, even if this is mid-cycle, guys, you know, even if this is mid-cycle, 70%, 75%, it's very potentially possible to get those kind of corrections, even if this is mid-cycle. Okay, so 70% brings us to previous all-time high for the total market cap, 2021 yearly open. Okay, also the bottom of this cycle. So this has confluence around this zone, and I would say this is the scenario if this is mid-cycle, you know, and we are going to possibly spend a few months here, just a few months and not longer, and then move up. If it's a complete crash cycle, then we cannot say for sure, because whatever evidence we have of previous crash cycles of Bitcoin, it reflects that, you know, there is always potential for that 80% and 80% plus. That brings us to here, the 536. Let's pull out the fibs. So yeah, that brings us below this 786, if that is the case. And that would essentially mean much longer consolidation as well. So you just look at this long time now to repair all of this, you know. Essentially it would only be a fundamental catalyst that could do that, and as of now we don't have something that could essentially battle with the FUD that is coming out. And essentially that is also fundamental news. Maybe in the long term it could be bullish, you know. Will crypto survive? Yes, I think crypto will survive. Why will it survive? Because it has this concept of you know, being anti-fragile. You know, anti-fragile, it's coined by Nassim Taleb. And essentially it's the opposite of fragile, you know. This is built to be robust. This is built to, you know, fight all of these institutions. And, you know, there is no single government, there is no collective entity that can threaten, you know, crypto. And essentially this is a result of them being threatened, guys. Why would the Pope be tweeting against, against Bitcoin. I mean, that was a direct attack, right? Like the Pope, so the church is a big institution, no offense against anybody who's Christian, but it's just the church is a big institution, and everybody has their own motives, and we don't need to get into that. But because they are threatened, the probability of this surviving is decent, but there can still be so many ramifications just fundamentally. I've shown you technically, but fundamentally right now there can be so many ramifications. This kind of a move, 50% value getting lost in a week, this can have ramifications regarding the ETF. The Americans don't want the investors to go through such volatility. This is very negative. Institutions, to get to watch what happened to other institutions. Everybody was buying up here, so all of those people are in trouble as well. So will the other boards of and funds and investors of institutions, will they still be able to want to invest in an asset that does this? I don't think so. Right now it's going to be very difficult if anybody wants to make a case for this. And that was essentially what was driving this. That was the narrative. All the accumulation that was happening in Bitcoin since February, at the high is 50k plus, between 50 and 65k, that just got left in the dust. It's turned into distribution now, so all the positive narratives right now in the background, and that's what a bear market does. But that's good for us, the people who are able to preserve their capital, because the narrative doesn't matter. In the end, it's going to be price. And for now, this is what it is, guys. This is a very big impulse. It is significant. It is not bullish. There is no bullish case here right now. I've given you the only bullish case, and we should only think and talk about it when that happens. Right now you should be focused, if you are still stuck, on getting an exit as high up as you can, and you have your point of negation right up here, so just think about that. And if you do trade regularly, then this is where we're going to be looking for short entries. Otherwise we're going to see, if we get up to these highs, we're going to see, if we're going to get some kind of structure up here which shows weakness. Otherwise, I think this is a much nicer level. It's a proven level. It's gotten very good reaction, and there's a lot of sellers waiting. So let's see how this goes. Quick look at Bitcoin. Just look at this volume. Just wanted to show you, this is just FTX, guys, but I mean, I have checked spot volume, I have checked perpetual volume across all exchanges, and it's relatively similar. This is how fat this candle is. The amount of volume that's been exchanged over the last week is absolutely incredible. It just means, like, there was heavy demand, that has been ripped right through with whatever kind of supply there was. Just a lot of buyers who have been buying, and they have just been sold into, and bounced perfectly at our level, the yearly open. You scaled in this box. If you did, between 32k and 29k, you scaled and you got a fantastic move out of here. This bounce was absolutely incredible. 50% almost on BTC. So just great level. Guys, know your levels and see. For what I would say, this is right now still very significant level on Bitcoin. We go to the 4 hour. So I'd say this is a very significant level. This 3-day block, this is a 3-day block. This 3-day block along with the yearly open, and this, there is potential for this to kind of make the floor. It's a very nice channel. Been playing this, was playing this up here, from here to the mid, from here to the mid. Eventually it broke down came back up, broke back down, just fighting with it. For now I'm just gonna hide it. But so for Bitcoin, I would say this is a very good level. It has proven itself on high volume. It has proven itself. For now, on its second attack as well, it has held. So in terms of support, for now this yearly open is a proven support. So what I would say is that if we are to move back up and come back down, there is potential to range within this range. And what is this range? This range that we are currently in is actually this one. Right here. This is the range that we are in. Let me take it forward. Yeah, not so bad, pretty clean. So you can see there is potential for price to trade within this range. I'm just going to remove this fib for now, though it is relevant, because we still made this move. This has been the entire move. So this was again the 382.5, the golden pocket. Essentially we were looking, if it was going to get really bullish, we could have gotten some higher levels, guys, but there was just so much relentless selling that price was just not able to even bounce to the 0.5. So currently, in terms of the range, here's a very clean range, and there is potential because currently for Bitcoin we have proven support and a significant resistance. So when we get these two levels, there is always potential after a big move for price to go back and forth within these levels. So this would kind of match with what the total market cap is doing. And if price is weak, after one or two tests, you could expect that this yearly open also ends up losing. It gets lost. But for now, we have to see, if this ends up being, whether this ends up being accumulation and we break up, or this continues to be distribution and we end up moving down. If that is so, then of course the most pertinent and prominent level is previous all-time high. I'm just marking it out roughly right now. Previous all-time high, this would be a very significant level. But we have to see, because the thing is, if this ends up being the end of a market cycle and we end up getting a complex consolidation, price is not going to make it easy, guys. Everybody is going to want a long previous all-time high. So we will have to see what kind of distribution pattern price wants to make, if that is so. So your bullish scenario, again, same thing, make a higher high, end up finding support and break that. That means we are done, for now. Otherwise, also, of course, the other scenario we can look at is that if this is reaccumulation, we get another test, possibly a spring, and we break back in. If you get something like this on Bitcoin, you spring, break back in, this would be pretty significant, guys, because look at this, a lot of equal lows right here. This is equal lows that have not been taken out. Even this big down here, it did not take these out. This is one hint that the market has left us, that now there's even more liquidity. Right below this yearly open, there's a lot of liquidity. So if we end up getting a spring like this, a decent reaction and a break in market structure, then right here you can start getting bullish again. This could kind of be like a Wyckoff accumulation. Of course, confirmation then will only come still once we break above this level right up here. the top of this range essentially. Once we break up from here, you will get your confirmation. So this is where you will find out that yes, this was accumulation. Anything below that, anybody is confirming it, they're just bullshitting. There's no confirmation. This, for now, this is just the first support, the first support that we have found after a big move. And if this is distribution, the other thing that can happen here is, I'm just gonna hide this now. If this is distribution, then we can come up here, find weakness, come back, test this, not take the liquidity, find another lower low, and then you can come back. But instead of going back up, price will just come back down. Then you will know. You can make very complex kind of distribution like this, guy. You like buy the dip, this was the low, buy the dip, this was the low, buy the dip, this was the low, buy. And you will know its sentiment when just nobody wants to buy it anymore, because they're like, oh my god, this is a downtrend. When that happens, then that is when we can start to get interested, because I can tell you something about dips and how you actually buy dead lows. It has more to do with sentiment than to do with technical analysis, because the thing is, everybody has technical analysis as a tool. It's not such a out of the world tool, guys. Everybody knows this level, previous all-time high. So if you think that this is something exceptional and this is something that will happen, you're not thinking unique. Everybody was thinking the same. The market is totally chopping them up and destroying them. And that's what was happening all the way down, right? Everybody who was thinking like the crowd, they just carried on suffering. So this is just a very common level. So I have my doubts. Somebody was asking me, okay, what's the best level? I would say maybe if we have to come down and this is the distribution, maybe we can make one more scare move down, at end of the world kind of a move. Or outside of that, I would say is I would want the average mining price, whatever that would be, because that's where I would be really comfortable. That's the real floor for Bitcoin, guys. The miner break even, the production cost. That's what I would be interested in. If if somebody puts a gun to my head and be like, where will you buy Bitcoin, without doing any TA, without looking at anything blindly, possibly that's where I would buy. But outside of that, we have to see right now, guys, how this accumulation or distribution, how this pans out. For now, we have a proven support, we have a resistance, we have a range. Price can range within here, easily for a month or two, and it can start to leave us hints. For now, the hint that has been left is that there are equal lows here. We never took that as liquidity. Price reacted below that. There is a lot of liquidity. So the hint is that if this is a accumulation range, if we take that liquidity, come up and start to make higher highs and higher lows, you get that hint that market is finding strength. Once we leave this range, that we are ready to move up. And if we take that and make a very weak move up and start to come back down, then we're going to exit to the downside from this range, and this is just another redistribution, and we're forming a complex pattern of reaccumulation. Where the lows are right now, we cannot say, and we do not know. We have this strong level right here. We can get a fake out below it. If you look at percentages, everything else is just opinion and assumption. 68-70% is like absolutely fantastic for Bitcoin now that everybody knows it's a proven technology. I'd be quite surprised if this has to go through an absolute and complete market cycle of 80% plus. There's something really wrong, guys, if that happens. It's going to be tragic if Bitcoin has to do another 85-90% market cycle. That would take us sub 10k. That would take us back to 10k. So I don't know, that would something that would be a big threat to the ecosystem. I would say that at least we have to stay higher than the production cost, the mining cost. I don't know where it is, maybe it's 14,000-15,000 around there, maybe slightly higher. But in terms of downside, that's where I would be looking at, if we do that. So here's the probabilistic scenarios along with some education on what to look for and what are the different things that you should be prepared for. So Altcoins BTC, guys, we have 2015, 16, each year, what have altcoins done is Bitcoin. If you understand from the nature of this chart in this market, it's a very cyclical market. There's many markets which are cyclical, guys. You have to learn how to trade them. It is just all the way up, all the way back down, all the way up, all the way back down, all the way up, all the way back down. This is just how value flows in this system. So you go up, it's like a 500% move, and you are down 78%. 300% move, down 66%. 200% move, down 54%. Likewise, 400% move, down 46%. Okay, and then we make another. This is the mega season, huh? We make another 100% move. After that, what do? Down another 58, almost 60%. Okay, so it's just a very cyclical market. Very interesting thing is after 2016, 2017, this was a special time in the market. Why? Because altcoins are finding their way into this ecosystem. So previously, the highs used to be around 2022. It's basically completely Bitcoin dominated world. This is 2016, 17, the birth of Ethereum is when this dominance started to shift. Because look at where we found the floor. The previous floor, you can see how this floor was rising. There's the prominence of altcoins rising. 2013 is just 3%, then 5%, then 8%, then 12%. And look at the jump from here. 2016 Bitcoin, the altcoin dominance floor is 12%, and we jumped up 128%. Guys, it's more than a 2x, all the way to 28, 29. I would say nearly 1/4, but you can kind of say 30%. That was the floor. So altcoins have proven themselves to hold 1/3 of the value in the crypto ecosystem. And from there we basically made a 2x, like a full jump to 2/3 of the value. And if it is that this market has to continue with its nature, what would you expect? Now that you have the facts right in front of you, are you expecting this to go all the way to 100? Is Bitcoin going to 0? Because if this is going to 100, that means possibly the ecosystem is dying. Something like that is happening. But anyway, why does this happen? This is the way to. Why is this cyclical nature in altcoins so extreme? Because this is just how market cycles work, guys. You get these narratives, you get everybody trapped up here. Then you pull out the value from the ecosystem. So everything is trapped in altcoins. Most of the people, I was sending out surveys, mid-May, and I think there was a very large percentage of people who were 80 to 100% in altcoins. Now they are down 50, 60%, and they refuse to sell, right? So it's the best way to keep the value in the ecosystem. Just decimate this ratio, and then pump Bitcoin on its own. So these people are just stuck in their vaults all the way till the next cycle, and trust me, some people have held for 3-4 years before they get to exit. Many people hold things that become entirely worthless. So this is a very cyclical market, guys. Once once this flips around, all experience tells you that you don't really need to play it unless you're playing it to the downside. That is where the big money is now to make in the altcoin ecosystem, unless of course you have individual coins, because no matter what the market was doing, there's always one or two coins that have some big narrative built around them, and you'll see them show relative strength and you'll see them pump. But outside of that, for now, this cycle, there is potential for it to be over. Even if this is a mid-cycle crash, look at this. This was 2017 mid-cycle crash, and I don't know how people can compare 2017 to this, guys. When the 2017 June to November, when altcoins were getting decimated by Bitcoin was still in a trend. Bitcoin is not in a trend right now. It is nothing like 2017. So stop comparing it to 2017. Is absolutely unique what is happening right now. So if that is the end of the cycle, this is likely to just bleed, guys. The minimum bleed that historically we have right now is just 38-40% nearly. Where is 40%? It's all the way back down here. So you're welcome to hold this if you want. The choice is yours. And then I'm just presenting you the facts. These are the facts about alts and Bitcoin and their relationship, and this is the cyclical nature of it. Well, for traditional markets, we were looking at Dow Gold. It's coming to hit first point of reaction. Let's see. The way this is structured, guys, is essentially possibly better if it does end up building this correction. And currently, this is with gold just having a lot of strength. Essentially, the Dow has not had too big a drop just yet, but this is reflecting kind of potential risk off kind of climate. And if you want to see what we were looking at as potential for a lot of chop or potential for downside, is looking at past trends and seasonality. You can just take a quick look at the last review, what we were expecting. So I don't want to cover it again, the scenario in the traditional markets, because it's looking like that period where you have to be very selective and very smart, and be very quick to take your gains. That's the kind of environment that's coming for the traditional markets. This is a very important ratio, and we're looking at a couple of key levels. So just something I wanted to mention, and something that we're keeping a close eye on. Quick look at the dollar, and you can see we're in quite a clean channel right at the bottom. But essentially, if you're looking at this 2-week chart, we had support, just tested it as resistance, closed this, and we're starting a new 2-week candle. So it's quite significant that we closed well below resistance, and we've well below support, and we tested it as resistance. So if we start to close below here, guys, below this channel, this is very significant, this yearly level. And after this, you can see that this little gap here in the dollar price does not spend too long. This is a volume gap. So if this does break down, you can expect quite a violent move towards the downside. So very significant level, and a hint that the price or the market is giving that there's potential for continuation downwards for the dollar. For commodities, I charted gold against copper, showing you this potential for precious metals to start gaining strength, and you can start seeing that in the charts as well. Significant resistance you can see on the weekly closes up here. Silver closed strong starting of May, and since then we have just been getting bought up. Look at this, finding support at what was previously resistance. This was resistance, we're starting to find support over here. This goes slightly lower. So yeah, so you can see we start trading into it, and we're starting to find support over here. If this does have to just go, it can continue this slow grind up. Let's see if we can find some kind of a channel in the smaller price movements, if there is something significant here. Right here, so you can see how price is just stepping up right now. So if you have not entered, you can look to catch some right here, close to the channel bottom, manage your risk from here. But if this is building some kind of a ramp, watch out. If we get up here, this is where I would be looking to add to my position, because then we start to get that impulse, get at least to the yearly level. But it could be time for the precious metals to shine, guys. And if you like up only markets and you can't trade short and you're still in crypto, it's the precious metals that you should be looking at right now.
If you found this video helpful, please give it a thumbs up and go ahead and share it with someone else. And if you have any questions about what we covered today, please leave them in the comments and I will be sure to get back to you or answer them in my next video. For more trading content and education, go ahead and click on the video on your right. Thanks for watching, guys, and cheers!